Welcome back. You're watching us here on Halftime Report. Let's get chatting with the management of Suprajit Engineering. K Ajith Kumar Rai, who's the founder and chairman at the company, joins in to detail their business performance, not only in the first quarter, but more importantly, as they see it going ahead. Thanks a lot, sir, for joining in. I remember the last time you said that, because of Red Sea issues, etc., your margins could be impacted by about 100 basis points. And at the same time, you would, see some sort of improvement in the controls division over the next couple of quarters. So one quarter hence, how has the situation panned out so far? Is the pressure on margins abating, and are we seeing some signs of turnaround in the controls division?
Good afternoon, and thank you for having me. Yes, we have seen some change in the controls division. As you have seen, for the first time, we have touched the 8% EBITDA margin, which was what our target was for the year in the very first quarter. The growth has been lukewarm, but operationally we are doing pretty well, and that's why the reason of the improved margin slightly. But on an overall basis, we have been growing pretty well. On a standalone basis, we are at about 13% growth, and even on a consolidated basis, we're about 8-9% growth, with the margins, meeting more or less what we have guided.
Okay. Sir, can you give us an update with regards to the automotive division? Because that seems to be doing well on a global level, despite what's taking place in the industry. You are seeing an inflow of orders. So tell us where it stands in terms of an order inflow that you saw this quarter, cumulative order book when it comes to the automotive division, and what you can guide on.
Yes, the automotive side of our business is doing pretty well globally. What has happened is that in the last 2-3 quarters, actually, we have been winning significant new contracts, which will go into production for the next, 2, 3, 4, 5 quarters. So what is happening in the industry is that the customer is looking at supply chain partners who can deliver products either from the onshore or from the close shore or from the low-cost destinations. With the acquisition of LDC and now that of SCS, we are able to give that perfect footprint to the customers, and that's why we have been winning a lot more contracts than the industry growth. So going ahead, although industry may not be growing, anywhere near maybe 1%, we are expecting, as we said, even in the controls division, by end of the year, we should be touching double-digit growth in that business. So there is a consolidation of vendors, and then, appreciation of the footprint that we have that has been winning us new contracts in the last few quarters. And that trend continues as we speak.
All right. So even as the fundamentals are showing signs of improvement in a couple of your divisions, right now as we speak, the stock is down by almost 6.5%. Maybe because the street is not very happy with the size of the buyback that you've given. I mean, just 1.3% of the current total market cap at 750 rupees per share leaves very little in the hands of, say, retail investors when it comes to, say, the acceptance ratio. Do you think you could have done a little more? And also, are promoters participating in the same?
First of all, you must understand on Friday, the stock went up 16%. So it's just, readjustment of the price. So I wouldn't comment on the price at all, but it has done a good returns to shareholders for many years. In terms of the size, our first buyback has been for 50 crores. Now it's about 110 or 112 crores. The underlying, philosophy of the buyback has been that Suprajit would be distributing between 30 to 40% of the, distributable profit to shareholders over a period of time. We have been doing about 20% of that through dividends, and the balance 20% through buybacks. So when we sort of accumulated 2-3 years of sort of undistributed, let's say, dividend, it amounts to that quantum. So that's what has been distributed now, in line with our assurance to the market. I think that's exactly what has happened. Price, on the day of declaration of the buyback, we have priced it almost about 45% higher than the previous closing price, which I think is quite attractive. Of course, subsequently, prices of the stock has gone up.
Okay. All right. Just wanted to get back to the overall growth that you're targeting then. You did around an 8% growth in this quarter. Your EBITDA was, better. It was up 20-odd%, margins at around 12-odd%, and profit of around 15% growth. Tell us, what are the coming quarters looking like? Are you going to continue this double-digit growth in terms of EBITDA as well as profit? And is the revenue going to pick up to a double-digit increase?
typically the first quarter of the year is a slightly lukewarm quarter in the automotive industry. It's a sort of seasonal business, particularly in India at least. We are seeing that, we are quite confident that by end of the year, we will be that double-digit, growth in business. Certainly in the standalone business, probably it will be much higher. But also in the consolidated business, including our subsidiaries, which are in marketplace where there is no growth, largely due to the increase in businesses and the new contracts we have won. In terms of the margin profile, I think we have sort of guided that on a consolidated basis, we want to be between 12 to 14 in the reasonable future. And we are at about 11.75%. We have also guided that on the controls division, the target is to do 8%. We are almost there now. For the first time, we touched it. And on the standalone, we have been between 15 and 17% EBITDA margin. And we have been very much there in this quarter as well. So generally, I think we are in a good wicket. I think the order wins gives us the confidence that the growth trajectory and the margin profile that we have been talking about all these days seems to be, happening as we speak.
All right. So just final question before we let you go. One is on the DCD margins, which, there are hopes of improvement going forward. If you could give us a sense of how July and August have been. And the second part is on your SCS acquisition. What do you expect it to be in this year and thereafter, steady state margins? On those two factors, if you could give us a sense.
I think on the domestic cable division, please keep in mind that, it also includes the overheads of the corporate as well as our, technology center. Last year at this time of the year, we had only about 40 or 50 engineers in technology center, whereas in this quarter, it has been in excess of 100. So obviously, those are the costs that is adding. If you look at the cable division on operational basis, it is, striking the same EBITDA margins as it has always been doing historically. Now coming to SCS, I think we have only done the first phase of the transaction. Please understand that we have bought it from an insolvency proceedings. And obviously that means that they have been incurring significant losses. So this is a little bit of a longish journey, and given, a year or two, I'm pretty sure that SCS will turn around nicely and give significant, not only the top line business, which anyway is there, but also improve its margin in line with our, targets.
Okay. All right, sir. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Suprajit Engineering seeing some amount of profit booking after that strong run that we saw on Friday. For the markets, there's some recovery which has taken place for the Sensex. So just about flitting between red and green, you'd have to say it's a consolidatory trend in today's trade on a larger scale. We'll take a short break, but a lot more on the markets. Stay tuned.